I wonder if you can just give us your quick take on whether or not the IPO market is roaring back, given what we've seen in just the last couple of months.
Yeah. Good morning, Dom. Nice to see you. I think that's the right word. I think IPOs are back. That's exactly what the people wanted to hear. The companies were waiting in the wings, waiting for the right conditions. And I think we're getting into that period where once we get past this September, October, which is always very volatile, I think we're heading into a very strong period where conditions are going to be right, the good regulatory effects, impacts, the rate cuts, and everything else. I think all that good tailwind coming into the later part of this year. So conditions are right. Companies that have the good operating model, I think they can get back in, get into the market because the public is ready, as you can see from the trading that we're seeing for the IPOs.
How much, Santosh, you listed a number of things, but many of those things are anticipatory. They haven't yet happened. Deregulation is in the process of maybe working its way through. Rate cuts have not happened yet. But just how much does the IPO market depend on those assumed events happening for them to continue on the path that they are right now?
The IPO, to the extent that the conditions, the sentiment is right, you need the good market sentiment. Public markets do drive the private markets to some extent. So if the conditions are right, the pricing is easier, price discovery is easier, and the IPOs can come out. So yes, it's anticipatory, but that's the way it works. By the time you wait for perfect conditions, it's too late. You just have to. I think you can see the tea leaves. Actually, the M&A activity has picked up, tremendous activity going on, big deals coming in. Then the IPOs are getting ready. And these companies have been waiting. They're profitable. They're good revenue numbers. And they're ready to get out. So I think all these things will help. Conditions are right, and that's what they were waiting for. So I don't see why they should hold back. Yes, unless there's something very out of the blue, I don't see anything that will disrupt. Yes, labor market is softening here and there, but I think in IPO investors, especially the institutional, look way ahead. They don't look at day-to-day investing. They're looking ahead. They're looking at the fundamentals of the company, and these companies that are coming out and waiting in the wings have strong fundamentals that they can stand on.
Santosh, we showed a lot of quotes that we've been showing our viewers here with regard to private market valuations as they've been kind of estimated by a Forge, a source for this kind of pricing data. What types of companies are going to be the ones that we should look at the most for in the IPO pipeline in the coming 3 to 6 months?
Yeah, in the near term, I would put like 2 or 3 companies, Klarna, I would say, and Dural and Grok. I think these are companies that are very ripe for IPOs. They're valued correctly, and they're all based on the secular demand out there. So they're not pricing just on today and just on, just for flaky factors. They're pricing on the demand that's coming down the pike. So these are good companies in fintech, in defense tech, and also in the semi space. There are all these 3 sectors that are really hot. And there are many more coming down the pike. And they're all reasonably priced. Yes, there's always some froth in terms of expectations, and especially when you have such a scarcity factor and not enough IPOs there. So you're going to see some excessive buying and some little bit of excess, but I think at some point people will realize that these are good companies and you need just to be there. And so I think that's the main thing. I think the underlying, I think the theme is that they are good fundamental stories. They're not just fly-by-night companies. They're real solid companies, have been waiting for a long time, and they're ready to go up.